Let's move to our PPT. So let's discuss what's our today's agenda first, and then we will begin with the session. So in today's webinar, we will be seeing a basic introduction to the intercompany. Then we will understand how the intercompany transactions occur, and then we'll move to the core configuration part, which is relating to the intercompany system options, transaction types, period status. And in the upcoming sessions, we'll see all the configurations and then how the transactions are managed in Oracle Fusion, which relating to the intercompany. So let's begin with the introduction. So introduction to the intercompany. An intercompany transactions occurs when one unit of an entity is involved in a transaction with another unit of the same entity. It is a transaction between two associated companies who file a consolidated tax return or financial statement. An intercompany transaction occurs when one unit of an entity is involved in a transaction with another entity or the unit of the same entity or same ledger. Most of the transactions involve two unrelated entities, but an intercompany transaction occurs when two related entities transact with one another. It is a transaction between two associated companies. Now we'll understand why these transactions occur. So while these transactions can occur for variety of reasons, they often occur as a result of normal business relationship that exists between the units of sorry yeah so I was saying that these transactions can occur because of various reasons, but they often occur as a result of normal business relationship that exists between the units of an entity. These units may be parent and a subsidiaries or two subsidiaries, two divisions, two departments of one entity. It is common for vertically integrated organizations to transfer inventory among the units of a consolidated entities. So the accounting treatment for intercompany transactions occur in a manner where the both the entity have to recognize the transaction. So an intercompany transaction is recognized in the financial records of both units of the entity. From the consolidated entity perspective, the transaction is initially unrealized because unrelated parties are not involved. So the intercompany transactions need to be interpreted differently than it was by either of the participating units. The difference in interpretation generally results in the elimination of certain account balances from the consolidated financial statement. The purpose of consolidated financial statement is to present the result of operation and the financial position of a parent companies and its subsidiary companies. So, when we consolidate the data, the interrelated transactions need to be eliminated. So regardless of the type of transaction, the occurrence of an intercompany transaction, if it is not removed or eliminated from the consolidated financial statement, will often result in a misrepresentation of the consolidated entity's financial position. Some reasons for the occurrence of intercompany transactions can be these transactions can occur for a various of reasons and normally occur as a result of normal business relationship between the units of the entity. An intercompany transaction is recognized in the financial records of both units of the entity. These transactions might or might not be settled through cash from the consolidated entity perspective, the is initially unrealized because the unrelated parties are not involved. Therefore, intercompany transactions need to be eliminated from the consolidated financial statement. Now, let's see what are the types of intercompany transactions. So, intercompany transactions can be of three types: downstream intercompany transactions. Here, the transactions flow from the parent to its subsidiary. Upstream intercompany transactions. Here, the transaction flow from the parent to the subsidiary. And the lateral intercompany transactions is transactions between the subsidiary. Upstream is transaction flowing from subsidiary to parent, and downstream from parent to subsidiary. Okay, let's move to the next slide. So here we'll understand how the intercompany transactions occur. So there are two legal entity Y and Z, and they have performed some business activity. So say Y is providing business value to legal entity Z. So in this case, Y will be receiving some monetary value back in future from legal entity Z. To make this reflected in accounting, the value which is going to be received in future by legal entity Y is parked in the intercompany receivable accounts of the legal entity Y, and legal entity Z is getting business value from legal entity Y. So it's a liability for legal entity Z. So to make this reflect in accounting, an offset of liability is parked in the intercompany payable account of legal entity Z. So how the transaction will be performed? Legal entity Y has provided some business value to legal entity Z. So it will record this business activity as an intercompany transactions. So when these transactions will be submitted, system will create an outbound transactions for legal entity Y, and additionally a system entry will be created for legal entity Z as an inbound transactions. And then the amount which Y will receive from Z will be termed as intercompany receivable account, or will be parked in the intercompany receivable account. And the services, as it is a liability for Y, as services has been received by Z, so it will be coming as intercompany payable account. The amount will be parked as the offset of liability. So let us understand the impact of the intercompany transactions. So interpreting the impact of intercompany transactions on a financial record of the units involved begins with understanding how the transactions are initially recorded or recognized on each unit's financial records. Intercompany transactions needs an effective system to manage them appropriately, as it can be a complex process for companies operating in multiple countries. Some complexities are streamlining intercompany trading with unlimited trading partners, local statutory compliances with intercompany invoices for each of the trading partner, intercompany reconciliation and transaction level balancing for subledger applications, and intercompany eliminations at period close. It is also important to understand how each intercompany transactions impact the the income statement and the balance sheet of the company involved in the period of the intercompany transaction as well as the subsequent periods. There can be two types of transactions: the intercompany transactions and intra-company transactions. If we talk about intercompany transactions, they are between two or more related internal legal entities with common control, that is, in the same enterprise. Intra-company transactions are between two or more entities within the same legal entity. Hence, intercompany is across legal entities, and intra-company is across various units belonging to the same legal entities. Rules for intercompany processing can be determined by the organization based on the internal procedures and guidelines. However, for intercompany transactions, companies need to follow the certain rules and laws. Now, in the Oracle perspective, the intercompany and intra-company, how the transactions are recorded, we'll understand that. So, in order to record intercompany transactions in Oracle, we need to create an intercompany segment with the optional qualifier. Also, we need to create separate GL accounts for each pair of companies doing business with each other. We can include multiple accounts to record intercompany transactions. Let's say our company is doing business with other 100 sister concerns or sister companies. Using intercompany segments method, we need one account, while using multiple accounts method, we need 100 accounts. It is very important to set up intercompany segments while creating segment in chart of account, because Oracle does not support any adding or changing segments to the structure once we start using that ledger. So to make this understand, let's go in the instance. So here, if you come to the if I come to the home page first. Okay, so from here, if I go to my chart of account for US primary ledger, oh, sorry, okay, setup and maintenance, financials, general ledger. My ledger is this US primary ledger. So when we are doing the intercompany transaction, we need to make sure one more important thing, that our intercompany accounting is enabled for our primary ledger. So as I am here, I'll show you that. So in the specify ledger option, we need to enable intercompany accounting by clicking this checkbox and in the intercompany tab. This is mandatory, and if I see the chart of account from here, it's US chart of accounts. Whenever we are doing the transactions for our intercompany transactions, it's always good to have our segment as one more segment as intercompany. So this is our chart of account. You can see here we have a segment code with intercompany. So same value set it is using as our company segment, means the company segment and our intercompany segment is using same value set code. So it will have the same values as our corporate company. So this will help us identifying with what uh, value is our company dealing with. Say there are see this is the first 100 North America. So if 100 is having a transaction with say 120 company segment, then in the company segment it will have code as 100 and intercompany segment will have code as 120. So this way, we can use this value to identify what our intercompany transactions are there. And the purpose of having intercompany segment is to keep the number of natural accounts used for intercompany to a minimum. In the absence of intercompany segment, we will have to allocate a natural account to each of our company in our group. Secondly, usage of intercompany segment enables tracking of intercompany transactions better by using the segment value to analyze transaction data, particularly when we are using transfer pricing, as long as we are using the same segment structure. With the help of intercompany segment, we can always use the segment to track intercompany transactions. So by looking at the segment, we can determine where the intercompany transaction belongs to. So for example, if we are having 25 entities across globe, then we can have one intercompany AR account and one intercompany AP account and use this segment to identify the intercompany entity. If we don't have the intercompany segment, the only way to track is to have multiple intercompany accounts for each combination, which will be a tedious effect. Here we can have just two accounts defined for intercompany AR and intercompany AP, and we can identify the intercompany through the segment intercompany. Okay, in the accounts we can have single intercompany AP and AR accounts, and this will help us because we'll not have to create many account combinations. So advantages of having the intercompany segment: it will help us to keep minimum natural accounts being used by identifying the intercompany. In the absence of the intercompany, we need to have a natural account for each intercompany we want to keep a track of. With intercompany segment, since intercompany is identified by a segment, we can use one natural account for multiple intercompany. This will be particularly useful when we have number of inter and intra-related companies to keep a track of. In addition to this, while consolidating accounts, we have to eliminate intercompany sales and intercompany COGS. With intercompany segments, we will be able to easily identify such intercompany transactions which we need to eliminate. One more advantage of having intercompany segment in our in our chart of account is that we can create either customized report or reports through financial statement generator to track the transactions coming from intercompany source. When a group of two or more businesses is required to report financial results of on a consolidated basis, generally accepted accounting principles GAAP require the elimination of intercompany sales during the consolidation process. Eliminating the intercompany sales of an asset has an immediate effect on the amount of consolidated net income reported on the P&L statement. This necessary elimination entries can affect future consolidated net income if the asset is ever sold to an unrelated party. An intercompany sale refers to any type of transaction between two businesses that are members of the same consolidated group, such as between a parent company and one of its subsidiary company. I can call this as a downstream intercompany. Because these company report a single consolidated net income figure, the GAAP requires the elimination of all profits and losses that are attributed to intercompany transactions to ensure that the net income is as accurate as possible. Without this elimination requirement, company can manipulate their earnings, mislead current and prospective investors and creditors. So this was an overview how intercompany segment is helpful. If we are creating our chart of account, we should create an intercompany segment if we have intercompany transactions, because once this is in use for our ledger, we cannot edit this structure created. Moving to our PPT again. So now we'll move to the um, configurations part. So before setting up intercompany system option, we must determine how to process our intercompany transactions. For example, to enforce an enterprise-wide currency or allow intercompany transactions in local currencies, allow receivers to reject intercompany transactions, determine the minimum transaction amount that is required to be processed. So the purpose of defining intercompany system option is to set up intercompany processing rules at the enterprise level based on the specific business needs. To maintain consistency throughout an enterprise, intercompany transaction processing rules should be defined at the enterprise level. By standardizing these rules, an enterprise can minimize disputes, decrease processing time, and cut administrative cost. Let's move in the instance to see how the enterprise system options are provided. So I'll come to the home page again. So, so moving to the setting and action tab from here, setup and maintenance. In the financials offering, we are having section for intercompany. Once we have defined our structure, the GL setups, payables, receivables setups, expenses, fixed asset and all, we have intercompany segment here, which needs to be intercompany, sorry, segment. It's intercompany functional area, which we need to define. So if I click on all task here, all the tasks which are present in the intercompany functional area will be available. So for now, we are talking about manage intercompany system options. These system options are defined for this for the system as a whole. So the intercompany batch numbering is there. The intercompany batch numbering options define whether to use system generated or manual transaction batch numbering. We choose one of the following options to create the intercompany batch numbers. The first is manual, which let us create manually the batch number, and system generated generates the intercompany batch number automatically through the system. The second option is, however, not mandatory. The one marked with star are mandatory setups to be provided, but we can have intercompany currency too. For standardizing the transaction processing by selecting an intercompany currency, intercompany transactions created in intercompany module are always entered in this currency. So if I'll specify the currency here based on my requirements. See, if I mention here USD, so all my intercompany transactions will be recorded in the same currency. This will simplify transaction processing and eliminate foreign conversion rate fluctuation risk. If you select an intercompany currency, the currency is defaulted into the minimum transaction currency, minimum entered currency. Here, minimum entered currency field. It will take the same currency as the intercompany currency. It overrides any other currency in that field, and then that field cannot be updated. So if I select some other, For example, if I have selected GBP, the system will change the minimum entered currency to GBP. Okay. So the intercompany currency and minimum entered currency needs to be same if we are if we are providing an intercompany currency to in our system options. Then comes the minimum transaction amount. Minimum transaction amount represents a minimum threshold intercompany transaction amount. This amount will prevent the submission of immaterial transactions for small amounts that does not add value. So say if just a small amount, say $5 or $10, $20 is involved, which is immaterial in case of intercompany transactions, so we can have a minimum transaction amount. So if I say 500 GBP, so all the transactions relating to intercompany below this, below 500 GBP shall not be recorded. So this prevents us by submitting of immaterial transactions which do not add the value. To implement this rule, you must first select an intercompany currency. That currency is defaulted into the minimum entered currency or minimum transaction currency for processing intercompany transaction. These two system options ensure that when comparing a transaction amount to the minimum transaction amount, the two numbers are entered in the same currency, allowing for an accurate comparison. So we can have or we cannot have this based on our enterprise requirement. For now, I am not taking any minimum transaction amount. And then comes the conversion rate type. So you can have a conversion rate type that you can use for transferring foreign currency intercompany transaction to your GL receivables and payables. So here are the list. So from here we are selecting corporate. Then comes the option allow receiver to reject the transactions. Here you have two options, yes or no. So if you have this as yes, we can use the system option to determine if the receiver of intercompany transaction can reject the transaction or not. So if your company policy require intercompany transactions to be approved but does not allow receivers to reject the transaction, then you can set this option as no. If you provide the receiver an option to reject this transaction, he can go through the transaction, he can analyze the transaction, and if that transaction is not related to his company or his entity, his unit, then he can reject the transaction. So this option is providing that flexibility to the receiver. Then comes the intercompany calendar and the period type. So you can have an intercompany calendar that is separate from your GL calendar. This will ensure that opening and closing of intercompany periods can be controlled separately from the GL calendar. You can limit the creation of intercompany transactions by using the intercompany calendar to close period by transaction type. So, for example, you can prevent users from creating intercompany sales transaction beyond 20th of each month by closing the period for the transaction type on the 20th, but keeping the period open for other transactions until say 25th of the month. So we can select a calendar from the available GL calendar in the list of values. So these are your GL calendars which are there. So you can have a different calendar which will help you close the intercompany period before your GL period, or you can have the same accounting calendar as your GL period. But then you will not be able to close it. You will have to close it um on when you are closing your GL period. We can select the values from here. These are all created by how we create the calendars for our GL period, same way these accounting calendars are created and they are available in our drop down. To update the intercompany calendar, to use a different GL accounting calendar, the intercompany period status for all intercompany transaction type must be either never opened or closed. The period type value is predefined from the selected accounting calendar and cannot be updated. This indicates the type of period defined for that calendar. Then comes the default transaction type. We can have a default transaction type from the list available. We can select the transaction type from here. And when we'll enter any new intercompany batches, the batch will automatically select this transaction type as our transaction type. However, we can change it. Then comes the option of summarize distributions for receivable invoices. Specify this option while setting up intercompany system option by selecting yes or no. There are two fields, yes or no. When you select yes, and then the provider distribution lines are summarized to generate one receivable invoice line. Intercompany passes the transaction description to the receivable invoice line. Note that the accounting of the receivable invoice still show each provider line separately. When you select no for the summarized distribution for receivables invoice option, each provider distribution line is passed to receivables to generate a separate receivables invoice line. In this case, intercompany passes each provider line description to the receivable invoice line. Means if you want to have single invoice for different lines, then you can select as yes. And if you want different invoices for different provider lines, you can select this as no. I have provided an intercompany calendar here. This is also my GL calendar, and I'll click on Save and Close to make the changes. Before moving to the next setup, let's move to our presentation. So here comes the transaction type. We use intercompany transaction type to manage the processing of intercompany transactions. When you create an intercompany transaction, you must select an intercompany transaction type. You can only change the transaction type if all existing transactions for that transaction type are either in new or closing state or the complete status, I should say. The attributes of the transaction type determine how the intercompany transaction is processed. The transaction type helps you to specify if a transaction is transferred directly to GL or do you want to have invoicing in receivables or payables. It also helps you to determine if you want for that transaction type to have manual approval. So for all the transactions that are not in new or complete status, you must process them until they are in complete status. And if the status is complete, you can change the transaction type if you want to. So moving to the application transaction type. So you can see here in the manage intercompany transaction types, there are a list of transaction types created. The first one is default, then intercompany addition, adjustments, chargeback, copy services, food services, payment, sales, sales receivables, shared services. So based on these transaction type, we create the transaction and we specify the receiver and provider organization. So this way the intercompany transactions are created. Now, if you want to have invoice, you want to create an invoice for that, for this transaction type, you can have invoicing option as a tick mark. If you want to have approval for this, you can have a tick mark over here. You can select the checkbox. I'll create one for you and show you. So this is the code is 10. I'll say demo Demo I see adjustment. Now here you can see boxes are there. So if I want to create an invoice for that, I'll tick this, and then when I'll create a transaction, an invoice will be automatically created for intercompany adjustment and the transaction type name demo IC adjustment. Now I want to have manual approval for this, then I can click here as a tick. So this transaction will go for manual approval before finalizing the things. You can specify the conversion rate type from here, but it is not mandatory to have, and you have to make this enable. Click on save and close, and this way you can create your intercompany transaction types. Moving to the last topic for the day. So that is intercompany period status. So period status comes into play when you have selected an intercompany calendar. So if you choose to use an intercompany calendar for your on your system options, you can open and close period by transaction type on the intercompany period status page. This means that the different transaction type will be mapped to that calendar, and you can choose for a specific transaction type. Like I had say 10 or 11 transaction type here, and say I have only intercompany sales transaction, so I can open the period just for the transaction type intercompany sales, and I can process the transaction there. Intercompany periods can't be closed if there are transactions for that period in one of these status: sent, error, or received. Before closing the period, you must move these transactions to the next period, and then only you can close the period. So there are two options to see the period status. Here there is manage intercompany period status. So as we have selected accounting calendar, so here we can see that. But now for now no period is open. So if I select a period name, or say I'll select a transaction type, say demo IC adjustment, and if I click on search, you can see no period is open. So if you want to change the calendar assignment, you can click here change calendar assignment, and from here you will see we have entered to intercompany system option. Here you can make the changes. Okay, but to how to open the period? So for opening the period, we will have to go to the navigator. From the navigator, we'll go to general accounting period close option. This is the period status for GL, receivables, costing, projects, payables, assets. But if you scroll a little down, you can see here intercompany period status. And you can see here this is May 23 and no period has been opened. Okay, all the transaction types are available. So if I want to open, say, IC sales, I'll select that, and then I'll click on open. Okay. Now I'll again scroll down and open two or more periods. So this is open for May period. Now if I open the payment one as well, open. From here only we'll close the period. And if we want to sweep the transaction to the next period, there is an option of sweep also. This is this is how we open the period. See, this is default. Let me open default also. Okay. Now, okay. Now let's go to the setup and maintenance area. Setup financials, intercompany, all task. Then this is manage intercompany period status. Here we can select the transaction type name. So IC sales, search. Okay, you can see for IC sales, no period has been open, but the last open period available is 5th of 23. Oh, sorry, means May 23. So, uh, period name, if we scroll little down, we'll see all the years detail since that GL period is present. Okay, if I select here as, and then I'll search. So you can see this is a open period. Now, when the transactions are created, all the transactions which are open will be available here. Okay, and then if we want to uh, close this period and the transactions are still open, we can sweep those transactions in the next period and then we can close the current period for the intercompany. So these main thing to remember is that the calendar is specific to the transaction type. Means the transit if we have closed for IC sales, it will not create the it will not close the period for IC payables because for IC payments the period is still open. So if you have transactions for IC payments to be recorded, you can close this period later on. So this is how the intercompany period status and calendar works. So hope you have understood the intercompany transactions, system options, transaction types, and the period status for the intercompany. Thank you for joining and thank you for watching. Hope you have understood the things explained. Thanks.